Imagine walking into your own bank one morning and seeing your name proudly displayed on the glass entrance. Customers are waiting in line. A team is humming with activity, and staff are efficiently handling transactions. You know that every system, every policy, and every decision ultimately comes from the vision you built. It feels like the ultimate symbol of financial power and success. Most people assume that only giant multinational corporations can own banks, but the reality is far more challenging and fascinating. Starting and owning a bank is one of the most heavily regulated and capital-intensive businesses in the world. In this video, we are diving deep into the complete reality of what it takes to own a bank today. The journey starts with an enormous amount of capital, because regulators require new banks to hold huge financial reserves. This money serves as a safety cushion to protect depositors if things go wrong. In countries like the United States, you first need to form a bank holding company before applying for an official banking charter. The application process is long and tough, usually taking 12 to 24 months or more. You must submit a detailed business plan and prove that you have experienced leadership. You must also demonstrate strong risk management policies and maintain proper anti-money laundering systems. All founders and key executives must undergo extensive background checks before the application can move forward. Any weakness in the plan can lead to rejection, and without an official license, you cannot legally accept deposits or call yourself a bank. Similar strict rules apply in India through the Reserve Bank of India, in Europe, and in other major markets. Without this official license, you cannot legally accept deposits or call yourself a bank. After receiving the license, the real expenses begin piling up quickly. You need to build or lease secure physical branches with proper vault systems, surveillance, and customer-friendly designs. Modern banking also demands heavy investment in technology, including secure core banking software, mobile apps, and advanced cyber-security systems. Setting up these digital systems alone can cost tens of millions. Compliance with hundreds of regulations requires hiring specialized lawyers, auditors, and compliance officers. Insurance policies, ongoing audits, and regular stress tests demanded by regulators add to the continuous costs. A small community bank might start with an investment of $50 to $100 million, while a larger commercial bank can easily require several $100 million before opening its doors. Staffing is another major part of the picture, because even a modest-sized bank needs dozens to hundreds of employees. Tellers and customer service representatives handle day-to-day transactions. Loan officers evaluate applications for home loans, car loans, and business financing. Risk management teams analyze credit risks and market fluctuations. IT specialists maintain the digital infrastructure, while accountants and finance experts manage the books. Security personnel and branch managers ensure smooth and safe operations. In bigger banks, you also need economists, data analysts, marketing teams, and human resource departments. Training all these people according to regulatory standards is expensive and time-consuming. Salaries for experienced bankers, especially in leadership roles, are quite high because the responsibility is huge. One wrong decision can lead to massive losses or serious regulatory penalties. For ordinary people and the community, a properly run bank brings tremendous benefits. It provides a safe and insured place to keep hard-earned savings. It offers convenient services like checking accounts, savings accounts, fixed deposits, credit cards, and digital payments. Banks give loans that help individuals buy homes, students pay for education, and businesses expand. These loans help businesses create more jobs and support the local economy. They also support the local economy by investing deposits back into the community through lending. In short, banks are the backbone of modern economies because they connect savers with borrowers and keep money moving efficiently. The future of banking will continue to combine physical branches with powerful digital technology. As technology evolves, banks will need to become even more secure, efficient, and convenient for their customers. But the core mission will remain the same: protecting money, supporting growth, and keeping the economy moving. So while owning a bank may be one of the most difficult businesses to enter, its influence can extend across an entire economy. For anyone dreaming of owning a bank, the journey begins with capital, knowledge, and a clear vision. It requires patience, expertise, and the ability to handle enormous responsibility every single day. But for those who succeed, owning a bank can create extraordinary financial influence and lasting impact. It becomes more than a business. It becomes a financial institution that can shape the future of an entire community. And that is why owning a bank remains one of the most challenging and influential business opportunities in the world. The ability to build trust, manage risk, and serve people responsibly is what separates successful banks from the rest. And in the end, the true value of owning a bank is measured by the people and businesses it helps succeed. That is the complete reality of owning a bank. An enormous challenge, a massive responsibility, and a powerful opportunity. The future of banking will belong to institutions that combine strong leadership with innovation and public trust. Those who can master all three may build a financial institution that lasts for generations. And that is why owning a bank remains one of the most challenging and influential business opportunities in the world. Now that the bank is finally open, the real challenge begins: running it successfully every single day. Running a bank successfully requires constant attention to risk management, customer service, and profitability. Banks earn money mainly through the spread between what they pay depositors and what they charge borrowers. Banks also generate revenue from fees on services like account maintenance, wire transfers, credit cards, and wealth management. However, regulators carefully watch these margins to ensure the bank remains safe and stable. A well-managed bank can be highly profitable, but one lending mistake or economic downturn can cause major losses. This is why experienced leadership and strong internal controls are absolutely essential. The teams that run daily bank operations are large and highly specialized. You need credit analysts to carefully check loan applications and treasury managers to handle the bank's investments. Compliance officers monitor transactions for suspicious activity and help prevent money laundering. IT departments work around the clock to keep digital banking systems secure and updated. Marketing teams attract new customers through digital campaigns and community outreach. Human resources make sure employees are properly trained, supported, and motivated. In larger banks, economists study market trends and help shape lending policies. A small local bank may have around 50 employees, while a regional or national bank can employ thousands. Every employee must follow strict codes of conduct and undergo regular background checks. For ordinary people and the wider economy, a good bank can be incredibly valuable. It gives individuals a safe place to save money, with deposit insurance helping protect their funds if the bank faces problems. It offers convenient services like mobile banking, digital payments, home loans, business loans, and credit cards. Small businesses rely on bank loans to expand, buy equipment, and manage their cash flow. Farmers can receive agricultural loans for seeds and machinery, while students can finance their education. Overall, banks support economic growth by channeling savings into productive investments and creating jobs in the communities they serve. However, owning a bank also comes with serious risks and responsibilities. You must always prioritize depositor safety over quick profits. Economic recessions, rising interest rates, bad loans, and cyber attacks can all create major challenges. Regulatory changes can force banks to make expensive updates and adapt quickly. Competition from established banks and new digital fintech companies is becoming increasingly intense. Success depends on building customer trust, maintaining strong financial health, and adapting quickly to new technology. Banks are also adapting to technologies like artificial intelligence for fraud detection and personalized services. In the end, owning a bank is not just about making money, but about managing other people's trust and money responsibly. A successful bank must also contribute to the growth of the economy and the communities it serves. If you are serious about this path, Start by gaining deep experience in finance and building a strong team of experts. Prepare for a long and difficult regulatory journey, because opening and operating a bank requires patience and persistence. It is one of the toughest businesses to build, but also one of the most impactful.